Wondering how ETFs can fit into your portfolio? Join us for our Spring into ETF Investing event, premiering May 12th and 26th. Check out these two exciting two-part events, which we curated specifically for you, the DIY Investor. Our special guest speakers and insightful industry experts will provide you with the information and education you need to confidently manage your own portfolios. You won't want to miss these specials. Visit etfmarketinsights.com for more information. And remember to subscribe to our YouTube channel for fresh weekly content. Hit the alert button so you never miss a post. Welcome to ETF Market Insights, a weekly show focusing on the evolving world of ETF investing. Each Friday, a new panel of thought leaders aims to provide investment education and insights with the goal of helping you become an informed investor. Make sure to visit youtube.com/ETF Market Insights to watch previous episodes. And remember to hit subscribe so you receive a notification when we post new content and when we go live each Friday. Thank you for joining us today. Let's get started.
Welcome back to ETF Market Insights. I'm your host, Erin Allen with BMO ETFs. Today, I'm joined by Carly Long from MSCI and Karen Christie from BMO Investor Ligne. And we're going to be discussing how investors can navigate the world of ESG investing. ESG investing, of course, sort of rose to popularity during the pandemic. More recently, we've seen a lot of criticisms in the media facing ESG or responsible investing. So we're going to tackle some of these and offer investors a way to see through the noise and better evaluate the ESG-focused investment options available to them. Just as a reminder today, we're not providing you any advice or investment recommendations. As with all of our shows, this is about providing education around investing and around using ETFs for Canadian do-it-yourself investors. And because I have Investor Ligne, I have a bonus disclaimer here around same thing, we're not providing advice, and this is for educational purposes only. With that out of the way, I did want to give a quick reminder to check out our YouTube channel. We've been doing this for almost 2 years now, so we have over 100 videos there, and just want to encourage everybody to please subscribe and ring that bell so that you're notified each Friday as we go live with a new episode. So welcome to my guests, Carly and Karen today. Carly is joining us from MSCI, where she's the Executive Director of ETF Client Coverage. And MSCI, for those of you who don't know, is one of the leading ESG data providers and also a leading ESG index provider. So it's great to have you on today, Carly. Looking forward to our discussion. And Karen is joining us from BMO Investor Ligne. And closer to the end of today's session, she's going to be walking us through BMO Investor Ligne's latest ESG tools, which are a great new addition to their platform. So I'm looking forward to that as well, Karen. So to kick things off for our 1-minute update today, I thought it was timely, given our subject, to highlight some of the ESG-oriented highlights from the federal budget that was recently announced. So I've got about 5 of them here for you to have a look at. The Canadian Infrastructure Bank, it was announced, will invest at least $10 billion through its Clean Power Priority Area and at least $10 billion through its Green Infrastructure Priority Area. So this is really going to allow this Canada Infrastructure Bank to invest over $20 billion to support the building of major clean electricity and clean growth infrastructure products. So there's no shortage of sort of ESG-focused highlights from this budget. The budget also proposed to provide $3 billion over 13 years. This is going to start later this year to Natural Resources Canada. And this is to recapitalize funding for the Smart Renewables and Electrification Pathways program. Also to renew the smart grid and help capitalize on Canada's offshore wind energy program. Investment tax credits for clean technology manufacturing, investment tax credits for clean hydrogen, as well as clean electricity were announced. So this is all very exciting. Also to build more zero emission technology in Canada. Budget 2021 reduced corporate income tax rates by half for zero emission technology manufacturers, and this was this was extended. So a lot of great announcements out of the federal budget. So I encourage you to have a look at that, because I think this is going to really move our country forward in terms of the clean energy and renewables space. All right, Carly, let's kick it off today and get into ESG investing. To get us started, I'm hoping you can just provide us with your overview definition of ESG investing, kind of explain what it is and what it is not for us.
Yeah, absolutely. And thanks for having me, Erin. I mean, I think ultimately a big takeaway we should have from today's session is that there's no single way to approach ESG investing. And we really need to move beyond the letters to understand the investment concepts and goals that are backing environmental, social, and governance investing. So the way that MSCI often looks at this is through a lens of financial materiality. That is, what are the risks and opportunities across the ESG landscape? We also provide robust data sets that have gone through rigorous quality checks and verification processes so that our clients can reliably use these inputs in a way that is consistent with their approach to ESG, whether it's about that avoidance of risk and highlighting opportunities, or even impact investing. And unfortunately, a lot of these nuances go unappreciated by some of the pundits, as you referenced earlier, to the space, who sometimes claim that ESG is putting a social agenda before financial returns. But at the end of the day, ESG is just data, and it's data that can be used in many ways to meet the personal investment goals of individual investors. So it's really part of this broader theme of the democratization of investing that we've seen over the last several decades. And while the majority of ESG data is integrated into an investment process to avoid risks and find opportunities, there are options available by using this data for more impact-minded investors who maybe they have religious convictions they want to adhere to, or social responsibility considerations.
Yeah, I think that's really important to remember, is that ESG is just data, and the way that you use it is going to depend on the investment manager and the product that you're selecting. So it's always good to remember that. And I think, as we look at some of the criticisms, a lot of that has to do with the communication around how investment products are using this. But we've definitely seen a lot of criticism. In the US, the Republicans, basically calling ESG woke capitalism, that's just prioritizing liberal goals. And then, on the other end of the spectrum, where it's being attacked for just not doing enough, for the lack of impact that it's providing to climate change and other issues. How do you think ESG got to this space of being so controversial? And do the critics have a point?
Yeah, I think they really are not seeing the forest from the trees. And it's funny you mentioned that we get criticisms from both sides. And to the earlier point, it's really about meeting investors' goals. So you can use ESG as a tool to dial up on the social aspects, or really just trying to avoid risks. For example, it might be worthwhile to share that these ESG processes are always evolving as industries evolve. So just to give a very poignant couple of examples, the Vale dam, the tailings dam collapse that we saw in Brazil at the end of 2019, that killed 270 people. It also led to about $5 billion in losses due to liabilities from that accident. And MSCI now uses flood maps and satellite imagery. So we're not taking the word of these companies that their dams are stable. We're really verifying that data, and that is a material loss. So this is all in the realm of ESG, and I think this is one of the things that those pundits just either willfully ignore or don't understand.
Yeah, I think that's an interesting point too, in terms of how the research has evolved. Like, you're now using flood maps, but probably when it first started out, that wasn't the case. So as it continues to evolve as well, the data will only get stronger. Can you walk us through the MSCI's ESG rating model and sort of deconstruct that for us?
Yeah, absolutely. So we look at ESG in terms of a scale, and what this scale here from AAA to Triple C attempts to illustrate is how companies measure up against their industry peers in managing ESG related risks. So we use a very transparent, rules-based methodology that's designed to measure a company's resilience to these long-term industry material, environmental, social, and governance risks. And as I mentioned, it's a dynamic model. So it evolves as industries evolve and as we have new tools made available. So today we're leveraging artificial intelligence, machine learning, and natural language processing together with a team of over 400 ESG analysts. So we evaluate not only all the public disclosures, but we also use these tech-enabled human insights to create a more complete picture. And our ESG data team processes and standardizes over 40 million data points per year, 40 million data points per year. And in the spirit of transparency, we also make these research reports available to companies. So in fact, from that, we actually handle about 85,000 challenges per year on our scoring methodology. And most of these challenges are just about clarifying the data. So we explain why we collect, what we collect, and a few of them are related to actual data updates. But these engagements make us all better, and MSCI aims to be very transparent in its entire process. So that makes the industry better as a whole. And that research leads us to that AAA to Triple C scale based on a company's industry material ESG risks and their ability to manage them against their peers.
Yeah, and you mentioned that industry materiality. I think that's so important. We don't need to be ranking a bank on, water scarcity risks, for example, as we would a soft drink company. And there's so many more examples of that where, risks really need to be analyzed relative to the industry they're in. And I think that's a really important part of it as well.
Yeah, I'm glad you bring that up, because as this slide suggests, there's a tool that we have available online where it's called our interactive ESG industry materiality map. And anyone can go in and look up any industry and sub-industry to see what are the key ESG risks relevant to that sub-industry. So if we take electric utilities, for example, the largest risk from a ESG standpoint is governance. But under environmental, it gets very specific. It's about toxic emissions and wastes, opportunities in renewable energy, carbon emissions, water stress, biodiversity and land use, etc.
That's important. I forgot to mention all of your tools that you guys have on your website too for do-it-yourself investor clients. There's a whole wealth of resources. Even your podcast is a great thing to leverage if it's a space you're interested in as well.
Yeah, thank you. I know the podcasts are great and short, which is always helpful.
That is always helpful. Yes, we're all busy these days. Is there such thing as a perfect ESG rating?
Yeah, great question, Erin. We actually don't look at ratings in that way. So I think it's fair to say there's no perfect company from an ESG standpoint. I mean, we're all here to maximize profits, and sometimes there are risks that come up that need to be alleviated. But what we're really trying to do is evaluate companies against their peers. And what you can see here on this slide is that it's very hard to get a AAA status. Though, while that's not a measure of perfection, it is a measure of a AAA status against peers. In fact, only 3% of the more than 9,000 companies making up the world's market cap actually achieve AAA status. And you can see the majority of these companies sit right in the middle at BBB. And on the bottom of this slide, you also see that many companies are actually stable in their ratings. So that's good, at least they're not moving down. In fact, if you look to the right of that, we're actually seeing that there are more companies moving in an upward trend than a downward trend. And then for the do-it-yourself investor who's interested in looking at this from a sector approach, on the right, you can see how ESG ratings break across sectors from dark green AAA to dark red CCC.
Yeah, I think that's really interesting to look at. A lot of ESG investors think that, ESG investments just exclude energy, typically. But in reality, with an index approach like you guys use at MSCI, energy is very much included, and all of those companies are rated against each other, and you can see, what portion here are coming out on top. So that's definitely a nice chart to look at. When it comes to the actual goals of ESG, we've talked about how investors may have, financial or the goal of reducing the financial impact of ESG related risks, and others may have more impact-oriented goals where they want to see change. How can investors use their investments to actually yield change? Can they do that?
Yeah, absolutely. I mean, as we touched on in the beginning, there's no single uniform approach to ESG investing. We broadly categorize them in three very broad categories. So on the side that you referenced with an index approach, it's usually about integration. And then there's also values investing and impact investing. So with integration, it's really about integrating those ESG data points into a systematic process, and you might include or reward certain actors for their good ESG scores, or maybe reduce or even eliminate, depending on the strategy, based on poor ESG scores. Values investing is really investing in alignment with an organization or an individual's moral values and beliefs. So that would be more like Islamic investing, Catholic investing. And then impact investing, which I think you referenced, Erin, is really about investing with the intention to support positive social or environmental benefits alongside a financial return. So there are certainly lots of strategies out there that do this. In fact, there are a lot of activist investors who will use MSCI ESG data in order to encourage, either through proxy voting or other means, companies to clean up their act, for lack of a better word.
That's interesting, yeah. And I think it's important to consider too, like at BMO ETFs or BMO Global Asset Management, for example, we have an entire engagement team that uses the assets under management that we have and, votes proxies on those securities that are held and tries to drive change from our end as well. So while it's not the same as impact investing, there is some aspect of, trying to drive change around ESG issues that is going on behind the scenes as well. I wanted to highlight this. I have definitely shown this on a previous Market Insights because I think it's great new development in the Canadian industry, because I think it can be confusing for a lot of folks out there. Oftentimes the fund names don't specifically explain what the goals of the investment product are. So how are you supposed to find out off the street, what type of product you're invested in? So of course there's the prospectus that you should be looking at, you should be reading to find out what are the what's the methodology behind the portfolio. But regulators are also trying to come up with sort of a common vocabulary. And this is the framework that was recently announced this year from CIFC here in Canada, a new framework to basically provide investors consistent set of categories where funds can potentially lie. And it is important to know that a specific product could fit into more than one of these categories at any given time. So they're not mutually exclusive. So the 6 categories are ESG, integration, and evaluation. So this is, as Carly was mentioning, products like our ESG-based index ETFs, where they're using that ESG data to build the portfolios. ESG thematics, these are things like women in leadership or any funds that are considering board diversity. Funds like clean tech, low carbon, all of those would fit into the thematic space. ESG exclusions, so a lot of ESG products are going to use this where they either exclude specific sectors or have different business involvement screens like tobacco, alcohol, gambling, that type of thing. Impact investing, this is where the fund invests in companies that intend to have a positive or measurable impact on the environment. So again, with these, the big thing to consider as a DIY investor is to make sure that the fund is measuring the impact. If you're investing in an impact fund, you want to be able to see that there is being an impact made. So there should be some reporting around that as well. ESG engagement and stewardship. This is where the fund's managers use the fund's position of ownership in different companies to influence the company to make decisions around ESG issues. And lastly, ESG best in class, also referred to as positive screening. And these funds generally invest in securities that meet specific criteria related to ESG factors, usually a threshold. So again, our ESG leaders, MSCI index ETFs would fall into this category where, for the equities, they'll only invest in companies that are rated BB or above. So that's an example of that. And I think this is great because now you can go online and you can find out how your fund is categorized and have a little bit better of an idea in terms of what you're actually investing in. So it's a good step forward in terms of transparency, which is much needed because there has been issues, of course, with greenwashing that have come out, some real issues that have come out in the news. And I think this can cause investors to sort of blanket criticize ESG investing across the board, but what's the reality here, Carly, in terms of greenwashing?
Yeah, I'm so glad that you covered that last slide before asking this question, because I think it goes hand in hand with this topic. I mean, as ESG has grown in popularity, so have the questions about its credibility, with skeptics and idealists alike really touting examples of greenwashing or social responsibility spin. And the good news is, from regulations like these, we're starting to see, like the one you just covered, we're starting to see an emerging common vocabulary that has already started to aid with transparency and, more important, really clarify investor choice. Because that's what this is all about, right? We're all just trying to meet investors' needs across the spectrum. So regulators across the globe, not just in Canada, but the EU and US, are really undertaking official consultations with companies like ours, MSCI and BMO and others, to create a clear set of rules regarding naming conventions, labeling, disclosures. So we really expect to see all of this, a great deal of these accusations of greenwashing recede as we develop that common ESG language.
Yeah, that's a good point. That should definitely help. Okay, now another big criticism that we see is that ESG investing is only about downside protection. What do you think about that, Carly?
Yeah, well, that's definitely a big one. I referenced the Valet spills. I mean, Volkswagen's Dieselgate scandal also led to 20 billion in losses for that company in the US alone. So the downside is substantial, and I don't think that should be minimized. But we actually did some research at MSCI where we could deconstructed the ESG ratings performance across E, S, and G pillars. And governance tended to reflect these acute event risks like fraud. And then the long term, it was the environmental and social indicators that became increasingly important because they're often associated with erosion risks to long-term performance, as things like carbon emissions tend to be more cumulative. But ultimately, for the serious long-term investor, the conclusion is what matters the most, and that is that a balanced industry-specific weighting of E, S, and G issues shows better long-term stock performance than simple market cap weighting, which this graph here just perfectly illustrates, where you can see the MSCI Canada ESG Leaders Index versus the broad Canadian equity market. So rewarding ESG leaders clearly leads to outperformance.
Yeah, and I pulled in Canada here because I thought it was most relevant, but when you look across other geographies, the story is very much the same. So if you just Google MSCI ESG Leaders Index, US, EFI, World, whatever it is that you want to look at, you'll see the story is, pretty much the same. It does have improvements on the risk side of things, but, it also has led to outperformance across some periods. So it's definitely a good way to look at things when you hear those criticisms. I did want to spend a couple minutes going through BMO ETFs ESG solutions just to give a high level here. I will also say that on our website, etfmarketinsights.com, we have a responsible investing section where you can find more information on all of these products. But at a high level, at the top, we have many different ETF exposures that all track the MSCI ESG Leaders Indexes. So ESG A for Canada, ESG Y for US, ESG E for EFI, ESG G for global, and then an India and China exposure as well. So as I mentioned, these products really look to invest in sort of the top 50% of companies in each specific sector, top ESG rated companies in each specific sector, and it will remove any securities that are rated below a double B. So a great index approach for investors who are looking to keep that sort of broad market exposure, but reduce the ESG risks in their portfolio. We also have some thematic exposures. So we talked about that. We do have a Women in Leadership ETF with a great ticker, WOMN. We have our clean energy exposure, Z Clean, which, you know, on the back of all those federal budget announcements, is poised to really see growth as we go forward. And then down at the bottom there, we do have a number of different fixed income exposures as well, tracking MSCI indexes. And the last thing I wanted to highlight was our asset allocation ETF. So this is the first in the space. Last week, we talked about asset allocation ETFs on the channel. These are growing in popularity. And we've launched ZESG, which basically bundles all of our broad market equity and fixed income ETFs into a one-ticket solution, one-ticket balance solution for those investors who wants that simplicity. All right, so that covers off our products. Karen, thank you for your patience. I do want to bring you in here and turn it over to you for sort of the final section of today's session. Can you walk us through the latest Investor Line offers as well as the great new ESG tools that you guys have recently launched?
Thanks, Erin. Thanks for having me today. So BMO Investor Line has some exciting and exclusive offers for the viewers today. If you go online and open and fund a new self-directed account, you can get $4.95 on equity and no commission fee ETFs. When opening an account online, just enter the promo code INVESTSMART, and the $4.95 will be applied to online and mobile equity and non-commission fee ETF trades for 90 days, and that will start the 5th business day of the following month. For those who are interested in Advice Direct, you can go online, open a new account, and enter the promo code ADETF3100. And if you fund at least $10,000 into your account by June 30th and maintain that balance until November 30th, you can get cash back in your pocket just for having an account with a balance. And the amount that you would receive would depend on how much you transfer in, to a maximum of $3,100 back. Terms and conditions will apply, and full details will be found on our terms and conditions. So BMO Investor Line offers a suite of no commission fee ETFs available for our clients. These include a broad range of asset classes, geographies, management styles, and popular themes from the largest ETF providers, including Vanguard, iShares, and BMO, of course. We selected ETFs with the highest trading volumes and with high liquidity, providing options to cover the full spectrum of investors. A list of the available ETFs can be found on the BMO Investor Line website. So I welcome the opportunity to discuss what matters to you. definitely feel free to reach out. My email address is found on there on the screen, and you can go online, open any accounts, new accounts, self-directed or advice direct, and the promo codes for self-direct is InvestSmart, and for advice direct, it's ADETF 3100.
Perfect. Walk us through these new ESG tools.
Well, we've got some pretty exciting news at BMO Investor Line. We understand that investors are looking for ways to make well-informed investment decisions. These decisions include choices that incorporate responsibly managed and sustainable companies in their portfolios. This is why we've integrated industry-leading ESG capabilities into our digital investing platforms on both self-directed and advice direct. ESG Insights, which is our new tool, is a tool that will allow clients to get comprehensive picture of environmental, social, and governance risks and opportunities surrounding their investments. This will help clients make more informed decisions that will align with their beliefs and values. These insights offer a powerful new framework to help clients research opportunities through a sustainable lens. ESG Insights are backed by MSCI's industry-leading ESG databases. It's important to note that there is no additional cost to access the ESG database on both platforms from self-directed and advice direct. We also provide an educational guide online along with the user guide to help navigate all the information you'll be receiving. So what does ESG Insights provide in terms of education? Well, technically the ESG Insights feature is seamlessly integrated into both our web and our mobile platforms. It enables investors to review the overall ESG rating and see how the equity or ETF performs under each of the 3 ESG pillars. And these MSCI ESG ratings are designed to help investors identify ESG risks and opportunities within their portfolio. So it's a little small, but if you can see on the screen, there's example of this particular equity. It's listed on the TSX. You can see that on November 22nd, this rating changed from a BBB to an A. And it provides a slew of information. When you're on the platform, you can go in and you can click and you will get more information as to why that change happened. You can also compare ESG ratings of a company to its stock price and to its industry peers. You'll be able to identify industry leaders based on long-term risks such as climate change, human capital, corporate governance, and board diversity, just to name a few. Industry-specific business issues that may create significant risks and opportunities, and clients will be able to analyze the adherence of companies to international norms and principles. So people often ask, how often is the information updated? MSCI performs daily monitoring and weekly update of controversies and events. The underlying scores are updated to reflect new controversies or new information on corporate governance, carbon, and other environmental and social issues. Significant changes to the data will trigger a rating review, and if there wasn't a rating review that was triggered, they are proactively reviewed within 12 months. So the significance of environmental, social, and governance issues in the investment industry has completely exploded in recent years. And we've seen tremendous growth in assets in ETFs and other products marketed as ESG investments. So BMO Investor Line recognizes this, and we want to help provide our investors with information that is not only relevant, but important to help make a well-informed decision.
Thank you so much, Karen. That's great. Great to see the new level of transparency that's available in the tools that investors can look at right on their own discount brokerage account platform to make their decisions a little bit more informed from an ESG perspective. So that's amazing. I love it.
Thank you.
All right, so that wraps up another great week of ETF Market Insights. Thank you so much, Carly and Karen, for joining me today and sharing all your great insights around ESG investing. Hope to have you back soon. Next week, I will be away, but we'll be having a brand new session that I'm really excited to introduce. So each quarter, we're going to be launching a portfolio strategy review podcast session. So Alfred Lee, who has been on the channel many a times, he's a director of portfolio manager with BMO ETFs. He's also our in-house investment strategist. He has a model portfolio that he's been running for nearly a decade. And he's going to be sharing that with all of our viewers on a quarterly basis. He'll walk through what's going on in the markets, any tactical shifts that he's making to the portfolio, and why. So I think this is going to be a great new addition to the channel, and next week will be our first of many. So hope you guys enjoy it. Definitely leave some feedback if you like it next week. And I hope you can join us then. Bye for now.
Thank you for watching this week's episode of ETF Market Insights. To stream any previous episode of ETF Market Insights series, please visit youtube.com/ETF Market Insights. Remember to hit subscribe and sign up for alerts so you know when we post new content. Also, we invite you to visit our accompanying website for ETF tools, education, and much more at etfmarketinsights.com. Once again, thank you for watching. The session provided is for information purposes only. Any reference to a particular company or product is for illustrative purposes only and should not be considered as investment advice or recommendation to buy or sell. Particular investments and/or trading strategies should be evaluated relative to the individual's investment objectives, and professional advice should be obtained with respect to any circumstance.